Not a week goes by where I am not asked, Steve, what is the fastest way for my company to raise capital now with a minimum out-of-pocket expenses that also sets my company up for future rounds of capital? The goal of any company, whether it is a pre-revenue startup company or a revenue-generating growth phase company, should be to position itself where it does not need to focus large blocks of human capital time on raising capital. Obviously, the fastest way for any company to raise capital is through friends and family. If you have friends and family with deep pockets that can and are willing to fund your venture, then that is obviously the best route. It is fast, and the cost of raising that capital is generally minimal. But what if you have exhausted that avenue? Maybe then equity crowdfunding is for you. The truth of the matter in equity crowdfunding is that success rates are low, mainly due to the fact that there are thousands of companies raising capital on hundreds of crowdfunding platforms and websites, legal and not. Further hampering equity crowdfunding is that the average amount raised amongst equity crowdfunders is approximately $38,000 per venture, with an amount of $200,000 to $300,000 being considered the high side. If you are a company in need of millions, equity crowdfunding is probably not the avenue for you. Venture capital is always fun and a clean way to secure funding. But securing venture capital is highly competitive, with only a small fraction of startups receiving funding, often less than 1% of those companies seeking capital, with those that do secure venture capital having spent months, if not even years, securing the capital. So, with friends and family, equity crowdfunding, and venture capital out of the picture, Steve, what is the fastest way for my company to raise capital now with the minimum out-of-pocket expenses that also sets my company up for future rounds of capital? When speed and low out-of-pocket costs are the essentials, the OTC Pink Market listing with Regulation A+ Tier 1 offering is the answer. You can go public on the OTC Pink Market in weeks for a couple hundred to a couple $1,000s without a need for a financial audit, and the company can then publicly raise up to $20 million as a public company. As your company raises capital, it can use those investment funds to complete a financial audit, amend its Regulation A+ Tier 1 IPO offering of up to $20 million to an amount up to $75 million, and the company can uplist its OTC Pink Market listing to the OTCQB or even the OTCQX. The process of an OTC Pink Market listing. Listing on the OTC Pink Market, operated by OTC Markets Group, is a relatively straightforward process compared to listing on major exchanges like the NYSE or NASDAQ, as it has minimal requirements and less regulatory oversight. The OTC Pink is the lowest tier of the OTC markets and is designed for a wide range of companies, including small startups, foreign firms, or those unable or unwilling to meet stricter reporting standards. I have completed many OTC Pink listings over the last 25 years, and in this video I will detail the process, timeline, and the costs associated with an OTC Pink Market listing. First, understanding the OTC Pink Market. The OTC Pink, sometimes called the Pink Sheets, is an open marketplace with no minimum financial standards or mandatory disclosure requirements for companies. It is split into three categories based on the level of information provided. Current information. Companies voluntarily provide current disclosures, e.g. financials, via the OTC Markets website. Limited information. Companies provide some disclosure, but not enough to be current. An example of this would be outdated or incomplete financial disclosure. And no information. Companies provide no public information. Unlike the OTCQB or OTCQX tiers, the OTC Pink Market does not require SEC registration or audited financials, making it accessible but also riskier for investors. Second, ensure your company's eligibility to list on the OTC Pink Sheets. There are no strict financial or operational prerequisites, such as minimum revenue, share price, or market cap to list on the OTC Pink. Companies can be U.S.-based or foreign, and they can range from legitimate small businesses to distressed or speculative entities. However, to be quoted and traded, the company must comply with Rule 15c2-11 under the Securities Exchange Act of 1934, which requires a broker-dealer to have certain current information about the company before initiating a quotation. Third, you must have a sponsor and market maker to list on the OTC Pink Market. OTC Pink Market securities are traded through a broker-dealer network, not a centralized exchange. To get listed, You need a market maker, also commonly referred to as a registered broker-dealer, to sponsor your company and quote your stock. Syndicate Legal Services work with a number of FINRA-registered broker-dealers with experience in OTC markets. They will act as your intermediary with OTC Markets Group and FINRA, while Syndicate Legal Services will provide legal and compliance support to your company. Fourth, submitting Form 211 to FINRA. The sponsoring market maker must file a Form 211 with the Financial Industry Regulatory Authority, commonly referred to as FINRA, to initiate quoting your stock on the OTC Pink Market. As part of this process, the market maker must provide basic company information such as name, address, and business description, evidence of compliance with Rule 15C2-11, which typically includes current public information like financial statements, shareholder details, and operational status. This information does not need to be audited or filed with the SEC, but it must be sufficient for the market maker to justify quoting the stock. FINRA reviews the submission and, if approved, assigns a ticker symbol and allows a market maker to begin quoting your stock. Fifth, provide disclosure. This is optional, but is highly encouraged. While not required, providing some level of disclosure can place your company in the current information or limited information category, making it more attractive to investors. To achieve current information status, you must submit disclosures such as financial statements and annual reports via the OTC Markets OTCIQ platform, a process that we at Syndicate Legal Services can assist you with. These disclosures should be updated at least every 6 months. Companies that provide no information will default to the no information category, which may signal higher risk to investors. 6. Pay fees. There are no direct listing fees charged by OTC Markets Group for the OTC Pink tier itself. However, market makers typically charge fees for filing Form 211 and initiating quotes. Also, it is important to note here that most market makers want the company to have a minimum of 25 to 50 shareholders that are not members of the company that have purchased shares of the company's stock. Also, these shareholders should be holding no less than 100 shares. Though OTC Markets Group has no minimum shareholder requirement, it will be very difficult to engage a market maker for an OTC Pink Market listing with less than 25 to 50 shareholders. If you choose to use OTCIQ for disclosures, there may be subscription costs, which is typically around $5,000 to $10,000, depending on the level of services. Syndicate Subscription Legal Plans provides OTC Pink listing services through its Basic, Basic Plus, and Complete Corporate Subscription Legal Services plans. 7. Begin trading. Once FINRA approves a Form 211, the market maker can start quoting your stock on the OTC Pink Market. Your stock will be assigned a ticker symbol, and trading can commence through the OTC Link ATS, which is an alternative trading system operated by OTC Markets Group. Investors can then buy and sell shares through brokers that offer OTC trading. 8. Timeline. The process can take anywhere from a few weeks to a couple of months, depending on the market maker's efficiency, FINRA's review speed, and the completeness of your documentation. Who can buy the stock of an OTC market company? Anyone can buy OTC Pink Market stocks online, but there are a few things to keep in mind depending on the investor situation and the platform your investor uses. As I detailed before, the OTC Pink Market is one of the tiers of the OTC Markets Group, often considered the lowest tier with the least regulatory oversight. It includes a wide range of companies, penny stocks, foreign firms, or businesses that don't meet stricter reporting requirements of higher tiers like OTCQB or OTCQX. Because of this, these stocks are considered riskier, are often thinly traded, and more generally known to be more volatile, but they're still accessible to retail investors. Investors can purchase the stocks of OTC Pink Market companies from the company and their broker-dealer, or they can buy them online through their brokerage account. To purchase online through a brokerage account, investors need an online brokerage account that supports OTC trading. Most major platforms like Fidelity, Charles Schwab, and TD Ameritrade allow investors to trade OTC Pink Market stocks. Some discount brokers, like Robinhood, historically have not supported OT.C stocks, though they've started expanding access to certain over-the-counter securities. Check their latest offerings. Apps like Webull also offer limited OTC market trading, but it's often restricted to higher-tier OTC market stocks, so confirm OTC Pink Market availability. Investors do not need to be an accredited investor to buy OTC pink market stocks. Anyone can buy and sell OTC pink market stocks. However, brokers might restrict certain stocks if they're flagged as caveat emptor, known as buyer beware due to fraud concerns or lack of current information. Investors are encouraged to check the OTC Markets website at otcmarkets.com for a stock status. Look for the pink current information, limited information, or no information label. What companies have taken this similar approach? Though there are more, Monster Beverage Corporation and Medifast Incorporated are the two that come to mind first. Monster Beverage Corporation started on the OTC pink market and moved up the OTC markets and eventually landed on the NASDAQ, where today it has a market cap of $55 billion. Medifast Incorporated, a health and wellness company focused on weight loss products, began on the OTC pink market before moving up the OTC markets and eventually listing on the New York Stock Exchange, where today it has a market cap of $144 million US. In conclusion, an OTC pink market listing and a public IPO offering of up to $20 million can be accomplished in just a few weeks' time with an out-of-pocket cost of a couple hundred to a couple $1,000s, which is less than what most crowdfunding portals charge their clients.